Hello friends, welcome to our channel Accounts and Finance with FARSK. This is our video on the International Financial Reporting Standards IFRS 1. Hope you will like, share and subscribe our channel. International Financial Reporting Standards IFRS 1. Introduction. International Financial Reporting Standards, or simply IFRS, are a set of accounting standards. The objective of the IFRS Foundation are to develop in the public interest a single set of high quality, understandable, enforceable and globally accepted financial reporting standards based upon clearly articulated principles. Adherence to IFRS standards allows for easy apple-to-apple comparisons of the financial state of different companies and comparisons of the same company at various periods of intervals or multiple points in time. All over the world, accounting bodies were trying to harmonize the alternative accounting policies, initially specifically to the listed companies as they adopted. However, as the time passes, other entities outside the scope of listed companies also adopted. Accounting standards prescribe in considerable detail what accruals must be made, how the financial statements are to be presented, and what additional disclosures are required. The current structure of IFRS was established in the year 1973. Financial statements provide input for most business and economic decisions. However, when these statements are not transparent and reliable, it could have a huge negative impact on growth of business enterprises and economy at large. Hence, it is essential to regulate the accounting process that helps in preparing financial statements in order to provide transparency, consistency, comparability, adequacy and reliability of financial reporting. It is essential to standardize the accounting principles and policies. Accounting standards provides a framework and standard accounting policies so that financial statement of different enterprises becomes comparable. Accounting standards are written documents, policies, procedures issued by the expert accounting body or government or other regulatory body covering the aspects of recognition, measurement, treatment, presentation, and disclosures of accounting transactions in the financial statement. In short, an accounting standard may be regarded as a sort of a law, a guide to action, a settled ground or basis of conduct or practice of accounting. Four underlying assumptions characterizes the IFRS: going concern, accrual basis, stable measuring unit assumption, and units of cost purchasing power. It encourages transparency and accountability of financial statements prepared by companies, small firms, and government agencies. As a result, it minimizes the margin of error and manipulation of any holdings and irregularities of funds, transactions, and balances. IFRS 1 requires an entity that is adopting IFRS standards for the first time to prepare a complete set of financial statements covering its first IFRS reporting period and the preceding year. The entity uses the same accounting policies throughout all periods presented in its first IFRS financial statements. Therefore, this is very important IFRS for the new companies or the companies adopting IFRS for the first time. IFRS 1 sets out the rules and procedures that an entity must follow when it reports in accordance with IFRS for the first time. The main aim is to ensure that entities' first financial statements and related interim financial reports are in line with IFRS and can be generated at cost not exceeding the benefits. It prescribes how the opening statement of financial position shall be prepared for the first-time adopters and what accounting policies shall be used. Example: when an entity adopts IFRS standards for the first time, stating complying with IFRS standards in its annual financial statements for the year ended 31st December 2020, it will require to select accounting policies based on IFRS standards effective as at 31st December 2021 with the early application of any new IFRS standard not yet mandatory being permitted. A first-time adopter can report selected financial data on an IFRS basis for periods prior to 2022, as long as they do not purport to be full financial statements. The opening IFRS statement of financial position will still be 1st of January 2021. Necessary comparative information is prescribed. At least three statements of financial position, two statements of comprehensive income statement, two separate income statement if presented, two statement of cash flow statements, two statements of changes in equity and related notes including comparative information. IFRS 1 then orders that an entity must explain how transition to IFRS affected its reported financial statements and prepare reconciliations of equity and total comprehensive income. The entity uses the same accounting policies throughout all periods presented in its first IFRS financial statements, and this standard does not apply to entities already reporting under IFRS. That's it for today. Hope you like our video. For more videos, please do not forget to like, share and subscribe our channel Accounts and Finance with FARSK. Thank you. Have a great day.